Julie Jockelle, real estate agent in Irvine, California.
Hi, Bill Kelso with Union Bank of California.
Oh, thank you so much, Bill, for coming to my open house today. As a viewer, you probably noticed this is the house. I have it at Orchard Hill Reserves, which is a guard-gated community, about 2,800 square feet, 4-bedroom, 4-bath with a loft.
Don't forget to mention the beautiful view out the
Oh,
back.
beautiful view. That's
Amazing.
right. Amazing view with the orchard and the canyon and the city view. So I have another video so you can see the details of the home. But today we're so lucky to have Bill here. We're going to talk about questions that you have about mortgage. How long have you been in the mortgage business?
I've been in like 22 years.
Oh my goodness,
Yeah,
22 years. So we have the expert here.
Yeah.
I'm just wondering if you can help us with a few of our questions. Number one, burning question. I get asked this a lot. The interest, what is the difference between the rate that Fed is raising and the mortgage rate?
Yeah, perfect. Good question. We get that
Yeah.
every day.
Every
Okay.
day.
Yeah. So the government only has control of what they call the federal funds rate. Okay. And so when they increase the federal funds rate is a short-term rate that governs credit cards, car loans, and home equity lines. That's all. Okay. As it pertains to long-term mortgages, like what I do, that's what they call the long bond. And so we watch the bond market and the 10-year treasury. And that's what we've seen just recently. Currently, yesterday, the 10-year treasury, we're sitting here on September 3rd. 10-year treasury is at about 325, 326 or so, and we'll probably go to 350. That was kind of the most recent high we've seen recently.
Oh, okay.
But the big difference is a lot of times when the Federal Reserve, the reason that they're raising the interest rates right now, they're trying to slow the economy down. When they increase the short-term rates, typically that'll slow the economy down and it will bring long-term rates down.
Okay.
We've seen kind of an anomaly just recently because they've done it so quickly that the interest rates have increased, the long-term interest rates have increased a bit just because the people that hedge these mortgages right now, there's so much uncertainty in the equity markets and also the financial markets. They have to do that short term.
Okay, so that brings another question. What do you see the trend of the mortgage rate for the rest of the year and also for the next couple years?
Yeah, so good question. We'll probably see mortgage rates, unfortunately, probably continue to go up a little bit between now and the end of the year. The Federal Reserve is going to make another couple of increases. They have 3 more increases this year. Most likely on September 21st, they'll increase it 3/4 of a point, and then probably 2 more increases later this year for another 1/2 point and 1/4 point. That's kind of what the market projects.
Okay.
I would suspect that we'll probably see interest rates go up another 1/2 point to 3/4 between now and the end of the year.
The end of the year.
Yeah.
Okay.
Yeah.
So I have buyers, clients, or even people visiting open houses. So they're saying they're qualified buyers, ready to go, but they want to see, they want to wait a little bit until the rate comes down a little bit to purchase. What do you think of that idea?
You know, I think I get that question all the time because we all want to make sure we take advantage of the best possible opportunity.
Right.
The mortgage rates right now don't matter so much. Probably in 6 months to a year and a half, we're going to see interest rates start to dip back down. So most of my clients right now that are buying are taking shorter term notes like a 7-year or a 10-year ARM. Just to go ahead and get into the home, knowing that we'll be back in a year and a half at much more advantageous rates than where we are right now.
Okay, so what you're saying is if you see a home that you like, grab it now. Don't wait for a year or 2 years down the road. That house may not be there.
That's my feeling, and I've been a mortgage guy for 22 years, but I've been buying and selling real estate for 35 years.
Right,
So my daytime job is mortgage. My all-time job is looking at real estate, and so I look right now. 4th quarter could actually be a really good time because there's been a period of time where everybody kind of pauses. There's so much misinformation in the markets about what's going to happen in the future.
Right.
There's people that think we're going to run into this 2008 scenario where all of a sudden real estate values are going to go down, and that's simply not the case. We still have very, very constrained inventory levels. They're just not as constrained as they were 3 months ago or 4 months ago.
Right.
We're still going to see appreciation, albeit it's not going to be the 10, 15, 20% that we've seen the last couple of years.
Right.
It's going to be more normalized. And I think it would be a surprise to most folks to know that over a 50-year period, in, appreciation for Southern California, Orange County specifically, 5.3 to 5.4% over 50-year period, and we're going to be higher than that this year, even with the changes and adjustments. We're going to be somewhere between that 5.4 and maybe 10% is kind of what we're going to see. So to hold off, all it means is you're going to pay a lot more for a home next year.
Right, right. And also I see something from the seller's standpoint. Some of the sellers, they put it on the market, they might lower a little bit, $10,000, $20,000. And then what happens is after 30 days, if they don't sell, what do? They take it off the market. So seize the opportunity. If you see something you like, I would say get it. Get the house you like. Now is a good time. Yeah,
you're gonna see we're in a new normal. This is something that's really unusual.
Right.
Everybody that's purchased homes has very, very low, good interest rates on their homes. So normally when we see the flow of inventory coming into the market where we have listings and all that activity, and you've seen it as well.
Yes.
Normally I'll see 40 new homes come in the market on a weekly basis in certain areas. And now what we're seeing is 15 homes come in the area and 20 leases.
Right.
So people just aren't in that mode where they're going to sell the home. They're going to go ahead and hold it for the appreciation, and so that further constrains the inventory.
Okay, so I got doorbell. Let me answer that open house real quick, and stay tuned. I'll be right back. Okay, sorry about that. So that was someone looking at open house. We were talking about people, sellers put the house on the market, and then in 30 days they can't sell. You noticed that from the report.
Yeah, we've seen a lot more because I think anybody that knows the market knows how little inventory there is. So they're anticipating this appreciation that we're talking about, where we're not going to see, again, the 20% appreciation, but we are going to see numbers that are above our normal. So, it wouldn't be unusual to see 8 or 10% appreciation. So their willingness to actually sell their home now, they're going to go ahead and hold on to it. So that's causing further constraint in the market because we're in an area right now, new construction, right? The new construction can only satisfy about 10 to 15% of the total demand. So we have a supply and demand issue, and that's not something that's going to take care of itself in 3 months or 6 months or a year. This is a longer term condition. So I think for those people in Orange County, I think 3 years from now, the home prices are still going to be growing significantly from where we are.
Right. And I see, for example, at Orchard Hill Reserves, you see AdReserve, there are 15, 16 homes for sale on the resale market. And they have an equal amount for lease. So people can't sell, they just put it over for rent.
Yep, absolutely.
And they hold on to it. So if you see something that you like, I highly recommend just get it. All right, let's go back to the interest rate. So would you say now it's a good time for people to explore the option of adjustable rate?
Most people are doing anything, but you are going to see interest rates improve over time. It's just at this exact moment, September 3rd, right now with all the uncertainty, the interest rates are priced up a little bit, but you're going to see them come down quite a bit. I mean, I think it wouldn't be unusual to see the interest rates come down a full percentage point or even more over the course of the next 6, 9, 12 months or so. So a lot of people short term will take an adjustable interest rate with no prepayment penalty or anything, and then we'll go ahead and refinance them, and they'll be in a really good interest rate long term.
So as long as you have an exit plan that you can refinance in a couple years, within the time, right? Within the 5 years, 7 years, or 10 years.
That's exactly it. And everybody, it's not unique to me. I'd love to say that I have some unique product or anything like that. But there's no prepayment penalty on pretty much any loan, so you can go ahead and take it, and we can refinance it in a month's time or 6 months or a year, whatever makes the most sense. And all we're trying to do is find the bottom of the market as best we can.
Exactly. And then now that leads to what kind of interest rate you guys are offering. I know on the market right now is high 5, almost to 6% interest rate. What about your rate right now?
We're what we call a portfolio lender, which means we lend our own money. We do everything from the conforming loans, which are loans that are 650, 700, but our real specialty is larger loans, anything that's million, like 850, $1 million, anything larger than that. Our interest rates still have 4s in front of them.
My goodness,
so we're still 4 3/4, 5% or so. We do have asset. The neat thing is if clients have assets they want to bring over to us, that helps them a lot on the interest rate. So,
Oh, okay.
yeah.
So if let's say I deposit $500,000 into your bank,
Yeah.
then that will help me to lower my mortgage rate.
Yeah,
a little
they'll get
bit?
a full half percentage point off the interest
Half
rate.
a percent.
Half a percentage point, and $1 million will get you
Okay.
0.75%. So there's a lot of really neat avenues that way.
That's fantastic. So this weekend, Saturday and Sunday, both days, 1 to 4, I'm gonna be here doing an open house. If you need a mortgage, I'll connect you with Bill, and he will give you a fantastic interest rate. Price of the home just adjusted about a little over 100,000 below the market rate. So this house is gonna go this weekend. So hurry up and text me. I'll have my number on the screen, and hope to see you this weekend. Thank you again, Bill.
Oh, Julie, it's total pleasure. Total pleasure. And again, you got to see this view. I love it. Got to
Yeah.
come and see Julie's listing. The view is absolutely spectacular.
Okay. Thank you for watching, and we'll see you next time.
If you need an experienced real estate agent in Irvine, California, text me. I'll be happy to help.